So, I tell you guys constantly, I know this is a more personal finance than business finance, but I like to throw a little bit of that in. Saw this article just this morning, 401k mistakes, and it just has 4 of them in here. Won't take very long. We'll just take a quick glance at that, because I think they're pretty accurate. I might argue a little bit with one, but not snagging your full, these are mistakes that people make when they sign up for their 401ks, not snagging your full employer match. So employers will oftentimes say, hey, we'll match sometimes 100% of everything you put in, up to 5%, say. Whatever it varies from company to company, so it could be all over the map, right? Okay, and you go in and you're new and you're thinking, well, let's see, if I put that extra $50 into my 401k, that's $50 I can't spend on beer this Friday, and so you don't do it. That's about the stupidest thing in the world, right? Okay, if they're going to match you, that's 100% return. If it's up 100%, maybe some of them will say, hey, we'll match 50% up to your 6%. So you put in 6 and they put in 3. That's still a 50% return on your money. Okay, you will never ever get a better deal any place that I can think of. Okay, and so you sign up and you make dang sure that it's signed up to the max. Over and above that, I would say yes, it's still a very good idea to even if they don't match it, to put money in your 401k. Okay, unless you're truly a motivated investor. There's some arguments on the other side of that, but I would say for 99% of us, you'd be smart even to put additional money in your 401k, even if it's not matched by your employer. Okay, so that's 1. 2, choosing the wrong investments. A lot of this has to do, I would say, with age. Okay, now I'm way older than any 2 of you put together. Okay, I still am very, yeah, it's true. Carl, even with you, I'm still older than any 2 of you put together. So, okay, so I'm still pretty aggressive. Okay, I still, with my 403B, it is here, because in your public sector it's 403B, private sector it's 401k, same thing. I'm still investing that as aggressive as I can. I just kind of go down the box and check aggressive, right? Okay, and I'm not that far away from full retirement. I'm already semi-retired. I'm not that far away from full retirement, right? Okay. That would give a lot of people pause. They would tell you that maybe that's a little bit crazy, but nobody's ever accused me of being fully in charge of my faculties anyhow. But for you guys, for young folks, over time, being aggressive and investing in, an aggressive but diverse portfolio, which 401ks are going to be diverse, they're going to have to be. They're going to put it into mutual funds or ETFs. And we'll try to talk a little bit about mutual funds and ETFs a little bit before class this semester gets over. But anyhow, it's going to be pretty diverse. Okay, so I would choose an aggressive option if I were your age for sure. Okay, because over time they're going to return a higher return than something that's a little less aggressive. 3, not paying attention to fees. Sometimes this is difficult because you don't have a lot of control over that. If your employer has a plan set up, you're going to pay the fees. Now, where it could make a difference is if you switch employment and you leave your plan at a prior place and they have high fees and whatnot, okay, you can do a couple things, generally speaking. If your current plan allows it, you can roll it into your current plan if you choose to. You can also roll or transfer money from a 401k into a self-directed IRA. Okay, self-directed IRA means you get to choose. Okay, it's the best place if you want to play with some money and invest a little bit and this and that. It's the best place to do it because you don't pay any capital gains taxes or anything like that. Okay, so you can put it in a self-directed IRA. You can go. There's low-cost places. You see them advertising all the time. Fidelity's down to 0 for fees for transaction fees, 0. So you can buy and sell stock and you don't have to pay any transaction fees. And some other ones are extremely low. Schwab's low, Vanguard's extremely low, on and on and on and on. Okay, so you could do that. Now I wouldn't advise a lot of trading. I'm not the trader myself. I wouldn't advise that by any means. But anyhow, pay attention. primarily if you leave and you go someplace else, it may make some sense. I would roll it into an IRA in my case, but that's because I enjoy, investing it myself then. Okay, so I'd roll it into an IRA. That way you can invest that yourself, put in things that you want to do, and shoot for some low-cost options that you would have there. And then borrow against it. A lot of 401k plans allow you to actually borrow against that plan. And this is the one where, okay, I agree with it in principle probably 90% of the time. Here's my theory about borrowing money in general. Don't borrow money unless it's to make money. Okay, I think borrowing money like for cars is horrible. Now, sometimes you're first out of college. My wife and I, when we first got started, we had to borrow money for the first car we bought. I don't think we've borrowed money for a car since then. So, because the car is just going to depreciate, right? So you're borrowing money, you're paying interest against something that's going down in value. That's my general theory about borrowing money. I think that's kind of true in business too, okay? So against your 401k, I'm not going to say if there was a really good opportunity, not a real speculative one, but if there was a really good opportunity that came up, and you had an opportunity maybe and you could borrow against your 401k to take advantage of that, I'd talk it over with a bunch of people before I ever did it. But that might be something that you would consider, if your mom and dad have a ranch and 160 acres comes up next to that or something, and you're still working, but you wouldn't mind investing in that, and they're going to lease it from you and help make the payments and whatnot, and you could borrow against your 401k to make that happen. Maybe, okay, maybe mom and dad are going to kind of backstop that anyhow, right? Could be some reasons like that where you might take a look at that. And technically, when you do, you're paying interest to yourself, so that's not that bad of a deal either. So there's 4 things that good thing to take a look at and to consider. How'd we do today? I think we were up. Market, what an affirmation after Friday's huge gain. You kind of come in the next day thinking, things are going to go down, and the market itself was up. We'll see how we did, maybe. Again, maybe we won't. Well, in the meantime, I'm going to go look at nothing. Oh, there we go. We made $700. It's not too bad. A little bit, probably right there about with the market. I think the market was probably up 0.5% or so today, and we're up about 0.5% or so. Any real big ones? Yeah. Wind did really well today. VFC did really well today. And Cat did pretty well today. So a few others. Dolby down, but just a hair. Brew down just a hair. Budweiser actually finally got in the green a little bit there, so that's kind of nice. Huh? It's about time? Yeah. Yeah, Budweiser's having a tough go. So when we get talking about, I know I've talked a lot about annual reports. I was going to pull one up. Maybe I still will if this thing decides it's going to work. Let's try this. Try a new page like that. I was looking at one beforehand. Who's got Costco in here?
I do.
Gosh. Good company in terms of finding information. I just picked that one. I typed it in like we would. I like coming, when I look at the company's website, if that's what the URL is, that usually gives me a good feeling that I'm going to find some pretty good information there. I click on that. Costco for Investors just has this really nice page. It's pretty easy, lots of good stuff over here. You guys aren't, I probably should have picked one that was a little bit tougher, that's not so easy, because some of these companies, it's almost like they're hiding their investor information page. Sometimes you got to scroll all the way to the bottom of their home page for their website, and then down there it'll say something about investors or for investors or investor relations or words to that effect. That's what you kind of look for, and that's what I am here. I'm investor.costco.com. So if I had gone to their homepage, I probably would have seen something that said investor. And then I come here, and I get some really good links over here, right? It's pretty nice. You got recent news. You got some other things on here you might take a look at. Down here, it does say their 2018 annual report. That's good. I want to click over here, though, on financial reports. SEC filings might be kind of similar. Financial reports might be better, I think, in their case, because that's going to limit it just to those reports that are related to the financials. SEC reports can have lots of other things in them. Okay, change of management, insider trading, some things like that we might not be that interested in. But I click on financial reports and, look at that. Going all the way back to 1998. Okay, that's pretty cool. So I want to click on the annual report here. And this is something that's been pretty consistent. And I know folks, I've said, well, at the beginning, and I should have been a little bit more clear, the 10K is what actually starts the legally required reporting to the SEC. That's really where you're going to find probably the financial, the meat and potatoes of the financial stuff that we want is going to be at the 10K. But a lot of these, when they put out their annual report, you get several pages of, CEO's letter to the shareholders, some different things like that. Very interesting. I'm not dissuading you guys from looking at that because it is very interesting, and you ought to read it. It's usually just a few pages. Here it talks about and shows where they've got their stores, and it's kind of cool. Okay, so I read that. I think you'll find it kind of interesting and kind of fun. The best one to read in the world is Warren Buffett's Berkshire Hathaway. Every year, his annual report, he writes a letter to the shareholders, and it's 2 pages, not real long, doesn't take you forever. But it's kind of fun to read. It's always interesting. So we get down here, right? The SEC, United States Securities and Exchange Commission, required form 10K. And just below that, we're always going to see the table of contents, right? There it is. What am I looking for? Well, I got some selected financial data. That might be interesting when I get down here to page 20. Management's discussion and analysis of financial condition and results of operations. That's probably going to answer a whole bunch of my questions that I might have and provide a whole bunch of the information that I might need for my report right there. Okay, it's 10 pages, no biggie, right? Financial statements and supplementary data though, and that gets to be a little longer. That's 30 pages. When we start really getting nitpicky and having to research, it might be in those 30 pages where we do have to find some of the stuff that's real, really kind of down and dirty. It's maybe a little tougher to spot right from the get-go. Okay, so sometimes we got to look through those, but a lot of the stuff's going to be right here in these 10 pages, and I'll cruise down there, hit the page down here button, and 13, 21, select it. Remember we looked at that other one, and this is why the annual reports, I think, are sometimes so good, but we looked at that other one, and it had their gross margin was typically right at that 13%. Here it's 11%. I'm not sure what the difference is, why I'm guessing that the other place is counting some stuff that these guys aren't counting towards the gross margin. What that is, I'm not 100% sure, and I didn't at first glance. I didn't find it. I'm not sure I'd look for it. I don't know that it's right at 2%, whatever that difference is. I'm not sure that I'd spend a lot of time looking for it. Here's what I found out, and I kind of knew this was true about Costco, but I found it kind of interesting that if you look at, here's their gross profit, right, 11%. Here's their selling, general, and administrative expenses as percentage of sales, 10%. What's that mean they're making? Huh? 1%. Okay, 1% on their sales. Where are they making their money? They're making more money than just that 1%. Where are they making that at? Membership fees. Look at that. Their membership fees amount to $3,142,000. Net income attributable to Costco, $3,134,000. So basically, Costco's entire profit is in its membership fees. Okay, the rest of it, they get you in the store. You buy stuff. You leave there with your cart, full. You just spent $500. Costco's really not making any money on that. Okay, but year in and year out, people pay for their membership fees, and that's basically the profit, isn't?
Do you have to pay? I never shopped at a Costco. Do you have to be a member to shop there?
Yep. You can go into their food court and buy their food.
No, you can't do that.
You can.
In California, they'll kick you out.
Really?
Mm-hmm.
Well, that's California. I think you can here. I think the ones I'm familiar with here in Montana, I think you can. Because usually there's kind of a separate entrance, and you can say, hey, I'm going in. I just want to get an ice cream or something. And you can do that. But maybe not in California. They may, Who knows? So, and I may be wrong about that. Maybe that's changed. And my wife has a card, so when we go, we could go have. I get the very berry sundae.
That's good.
Oh, $1.65. It's about that big, and I'll tell you what, it's about enough for 3 people to eat anymore. You youngsters probably, because you burn it off, but I'm getting too old to burn that off. But I still eat them. So, anyhow, there's a look at the annual report and a lot of narrative in here. But again, it's not 100 pages. Here's 2 pages of narrative, and then boom, I get to some other financial statements. And this narrative is going to tell me about the financial statement either I'm going to be looking at or the one I just looked at. Okay, so read it. I think you'll find information in there that's going to apply to your final report, your final paper. Okay, and will help you out with your outline that you're still working on. We'll probably make that due this Friday, right? Okay, so it'll help you out with that outline then as you're working on that big time. Okay, you'll find some things in here. Now, as I was looking at that, just to point out to Brett, here's one thing that, Costco is pretty plain vanilla. And you pick a company that's kind of plain vanilla, sometimes it's harder to write a good paper on that because you're kind of looking for stuff that may jump out at you. And there's not a lot. I mean, God, look at that, 11%, 11%, 11% on there, so their gross margins haven't changed a lot. They did have some nice increase in sales there. I'm guessing, though, that that's just comp sales. In fact, I know because I read it, but comp sales and some new stores opening up and a big increase from here to here. It was a big increase in gasoline prices, and also there was an extra week in there. We're not exactly 52 weeks. And so sometimes, 1 year they're going to have 52 weeks, and the next year they might have to make it a 53-week year or something. So that can make a little bit of a difference, and it did there. Okay, but look at this. This one is what kind of jumped out at me. Cash dividends declared per common share. Oh, $1.33, $1.70, $2.14. Well, that's kind of a nice, pretty consistent. But in between there, we had $6.51 paid out as a dividend in 2015. And $8.90 paid out as a dividend in 2017. Yeah, you're going to tell me about that, I know, right? Okay, that's a little bit unusual. It's not completely unwarranted, right? Believe it or not, years and years and years ago, it's been quite a while ago, but Microsoft, and they're still sitting on tons of cash, they actually declared a dividend. And it was so big, they had so much cash, they declared a dividend. I can't remember, it was $10 or $12 per share, and they had so many shares outstanding. They actually had to adjust for that when the government reported their GDP. It was like a stimulus, like the government will sometimes in a recession, they'll hand out a stimulus. Okay, it was like that. It was so much money. It was like 23 or 30 some billion dollars that went into the economy because Microsoft paid that big of a dividend. So companies will pay special dividends sometimes when they've just accumulated so much cash maybe that they don't know what else to do with it. So anyhow, I won't belabor that. You're on chapter 12 stuff. We decided, right, for this week, which looks like you're talking about some depreciation and some of those things too, if I'm not mistaken. So, okay.